Welcome back, folks. We had the Dow finish down 254, NASDAQ off 16, S&P's down 21. And, of course, after 2 days of testimony by Fed chairperson Janet Yellen, we have our man, Mr. Chris Gaffney, the president of EverBank World Markets. And, folks, come over to our website at TFNN, and you're going to be able to hit the banner on the right-hand side. As you hit that banner, you're going to bring up the EverBank website. The last hour we were talking about quite a bit about the gold, about platinum. Bottom line is that you can get gold and platinum bars right at EverBank. Their phone number is 855-750-4051. Chris Gaffney, welcome back to TFNN.
Thanks. It's great to be here.
I'm telling you, this has been quite a move, man. And, it's so cool because, we wanted to have you on, of course, because Yellen was on. We certainly didn't expect, the metals market to go off to the moon. And I know we get, a lot of happy tigers because they have been getting bars. I know, it's crazy, right?
Well, and Yellen had a tough job ahead of her. I mean, with the way she had a fine line to walk with this testimony. She had to sound encouraging that the U.S. economy was going to continue to expand. At the same time, she didn't want to sound too bullish or too hawkish, and ignoring what's going on in the markets right now, which is obviously the investors in the markets are telling the Fed that you can't raise rates right now. So
yes,
yeah, it was a tough job. I wouldn't want to be in her shoes, certainly, and right now I wouldn't want to be in the Fed's shoes. I think they're kind of stuck. I don't see where they can raise rates in March, and even after that, it's becoming a little questionable. So
it is because the rates across the world are so low. I thought and we know that you always have the bulls, the bears, and everyone else. And the last few days, Chris, people are talking about negative rates in the U.S. Now, I'm not in that camp because it's like it's not. I think there's a small disconnect between, how our economy is going forward, and the Europeans have some problems compared to what we are. Do you know what I'm saying?
And Japan has had those problems for years.
They have.
And so I think our economy, and I think where you're going is you don't see negative rates here, and I certainly don't see us going to negative rates. Now, at the same time, I don't think that Yellen is going to be able to raise rates in March. So, and I think that's what the markets are basically saying here. They're heading to the safe havens. The investors are bailing any kind of risk trades. We're seeing the emerging markets hit. We're seeing a lot of calls to the desk for physical gold, which is always traditionally, the move when investors get worried, and those physical assets is what they are what they want to hold. So,
and you can see why. I mean, the amazing part, is that gold at $12.46 is still really inexpensive. Platinum at $9.61, is not bad when you see the amount of currencies going down in the world. What's wild is that I was explaining to folks in the last hour, our dollar index, has come down. But certainly whether, if you're in Mexico, if you're in Colombia, if you're in Russia, if you're in South America, those currencies have come down like 30%. So you can see why people...
Dollar is still relatively strong, Tom.
Yes,
I mean,
right.
We're still sitting with the dollar that's relatively strong. And in fact, we're range trading on that dollar index. On our currency desk, we're still not seeing a lot of people getting into foreign currencies. There's still a real hesitancy on that in that regard. Whereas metals, we're seeing more of a push there. I think that I think investors in general are all wondering, if this is going to remain. What we've seen the first 2 months is going to be what the rest of the year looks like, and I'm sure it won't be. But we could have seen a turning point here, especially for the precious metals and perhaps for the dollar. I think that any any sign that the Fed's going to raise rates again will certainly boost the dollar again. But
it looks like they're not. Yeah.
In a range.
You know what's wild, Chris, is that I've been bullish. I thought that gold had hit a bottom, but I certainly. Looking at this move here, I'm even scratching my head trying to figure out, like, wow, what is this sniffing out? And I just think it's, at this point, and I'm speculating, of course, is that, okay, currencies are coming down, and this is a hard asset move. It's a true hard asset move.
And we're seeing that in the global race to the bottom, if you will, for interest rates and therefore for currencies. Because remember, currency investors look at interest rates as one of the main components of their return. And so, those as we see these central banks race towards negative interest rates, that puts a lot of pressure on their currencies, and somewhat on purpose. We see Sweden going with a big move, and I think a lot of that was on purpose in that they're trying to export. They're an export-based country, and they need to make those goods cheaper. So by decreasing their currency, they're making their goods cheaper, and they hope to boost their economy. But when you have everyone racing to the bottom, then that leaves the dollar and really right now the yen, which is interesting, an interesting safe haven move, but really the only two that are keeping strong. The rest of the currencies are certainly being slashed.
Yeah, and folks, as you come over to our website and you hit the EverBank banner, the yield pledge is still out there, the checking account, which is fabulous. Personally, if you're taking a vacation in the summer or your children are going to school somewhere else, the foreign currency bank accounts are amazing. Can you just talk about those for a second, Chris? Because I think that's a win both ways. Whether someone's taking a vacation and wants to put 10 grand in there, and if they don't, guess what? You're buying a currency very cheap, man.
Yeah, and you spoke about how you thought gold was at a bottom and fairly cheap even at these levels.
Yes.
Currencies are kind of similar. Now, we're like we said, we're seeing the dollar range trade. It looks like it's peaked out, but no matter what, Mexican peso is cheap right now. The euro is even fairly cheap. It's settled in here and recently, but we offer investors the ability to put money into those foreign currencies, hold them in an FDIC-insured bank account. Now, it's insured against bank failure, not against currency fluctuation. That account is going to move up and down with the value of that currency. So two benefits. A, if you do want to spend some of those euros or Mexican peso, you're kind of booking your trip at these lower
which is great.
Right now.
Exactly. And that's the point, folks, okay? Because when you figure it out, guess what? I don't think it's got to hit this bad in the last, 20 years ago, folks. You could go somewhere and really feel like you're rich. And you know what I'm saying? It's like, okay, you go to another country and you're really rich.
And right now, with the dollar the way it is. And it's dollar's relatively strong across the globe, and these accounts give you the benefit of booking those cheaper currencies, buying currencies at cheap prices, and you can hold on to them, let them appreciate. It's a diversification tool.
Absolutely huge, no doubt.
Metals is a way to diversify also. So,
no doubt. Well, listen, thank you so much. Look forward to having you on again, Chris.
You bet.
Have a great one. Have a safe one. You stay right there, folks. We'll come right back.